Hey, it's Martin coming at you with another update here. I just want to share some news here that happened today because before you put on the evening news tonight and watch that, they're going to be reporting that the U.S. Fed raised interest rates about 1/4 point today, which is true. They're also going to make it sound as though it's bad news for mortgage rates and for home buyers, and that is not true. The media always gets this wrong, and I want to make sure you're fully informed on exactly what's going on and how the Fed's actions today really play out in the mortgage bond market. So let me go to the charts here real quick, and I'll share with you what I'm talking about. Yesterday, I was very unsure as to how the market was going to receive this information. I was going over this chart here that basically shows you what interest rates have been doing in the bond market for the last 25 years. Now, this is the Treasury bill, and if you can see back here into the late 80s, early 90s, ever since then, we've been trading within this range here that's shown here between these two red lines, so it's up and down. And yesterday, we were right here on this edge. I did not know what the Fed was going to do. Therefore, I didn't know if we were going to break out of this range and go to the high side, in which case that would have definitely indicated a rise on mortgage rates. But instead, with the Fed's announcement today, we've actually dropped back down in the normal range here, which leads me to believe that we're going to have relatively normal activity for the next few months when it comes to mortgage interest rates. In fact, if we take a look at these other charts real quick, let me get my image out of the way here. This red bar signifies the drop in the U.S. Treasury bill that came out after the Fed's announcement. And as you can see, it pushes us right back down within the normal trading range, which is right in here. In fact, I can see us even drifting a little bit lower. Now, that's what's happening with the Treasuries. The mortgage bond market, in fact, let me go to this page here real quick. The mortgage bond market had a phenomenal day, and the higher the bond market, the lower the interest rate. We're up 78 basis points. In fact, if you can see right here, it says alert to float. I haven't seen that in a long time. That's wonderful news for anybody that is a potential home buyer. The alert to float tells me do not lock the interest rate because rates may actually be getting better. If we go to the chart for the bond market, it tells a similar story. On this bond chart, let me get this out of the way here. You can see, once again, it's up and down, and it's been kind of declining in the last several weeks. And today, in one day, the Fed raised rates, and all of a sudden, the bond market took off, pushing mortgage interest rates lower. That's what this green bar is representing. So, it's real simple. The Fed raised rates 1/4 point. The mortgage bond market picked up momentum based on that news, and that's causing mortgage interest rates to get better for consumers. The media will be reporting this wrong. Rest assured, they always do, and that's why I wanted to show you these charts. I don't mean to bore you with a bunch of technical charts, but I think it tells the story of what's going on. So the good news is, although rates have come up in the last few weeks, today we had a really good day. That's hopefully going to keep things in check for a little while. All right. As always, give me a call if you have any questions. Send me an email. Make comments down below. Call me if there's any specific scenarios you want me to look at. I'm always happy to help. And have a great day. Thanks. Bye.